The 9 steps a business goes through to record its financial information make up the accounting cycle. In Chapter 6, you'll learn about the first 3 steps in the accounting cycle. The first step in the accounting cycle is collecting and verifying source documents. Source documents are papers prepared as evidence of business transactions. Some business transactions in a typical day might include paying rent, collecting money for items sold to customers, purchasing new equipment, and placing an ad in the local newspaper. Memos, receipts, and invoices are some of the source documents that provide records of these transactions. The accountant collects these documents and verifies their accuracy. The second step of the accounting cycle is analyzing the business transactions that have occurred. The accountant examines the source documents and determines how to record each transaction in the accounting record. The third step in the cycle is to record business transactions in a journal. The business's journal contains records of all its transactions, including debits and credits, account names, and explanations.
Drag the labels below to step 1, 2, and 3 on the accounting cycle diagram. Then click Check.
Many kinds of journals are used in business. The most common is a general journal, an all-purpose journal in which all business transactions may be recorded. Begin a general journal entry by entering the date, the year, month, and day. Then enter the name of the account to be debited and the amount of the debit in the debit column. On the next line, indent and enter the name of the account to be credited and the amount of the credit in the credit column. Finally, enter the explanation. Often this is a reference to a source document. The posting reference column is not used in journalizing. This column will be used in the next step of the accounting cycle.
Click and drag the journal data to the correct locations on the general journal. Then click Check.